Hello and welcome to the 9th Islamic Finance Summit. I'm Paul Wallace from Euroweek, and with me is Bob Pickle, Executive Vice Chairman of ISDA, the International Swaps and Derivatives Association. Welcome, Bob.
Thank you.
Bob, can you just start off by explaining what the Tahawwut Master Agreement is and what ISDA hopes to achieve with its implementation?
It is a document to be used for hedging transactions compliant with Sharia principles, and that's the important nature of it. It is a master agreement like our well-established ISDA master agreement that's used in the traditional derivatives world around the world. And this is a different document that allows people to do these transactions compliant with Sharia principles. Central to that whole endeavor has been working very closely with another association called the International Islamic Financial Markets, IIFM, because we've brought the legal and documentation expertise, and they've brought the Sharia expertise, particularly with their Sharia panel, which has now approved the agreement.
And how close is it to being implemented?
It's very close. We really are in the final strokes. We've been working on this for a number of years. In fact, I was at this event 2 years ago talking about it, and it was very, very close to, we thought, completion at that time. But there is a process that we need to go through. And it's an extensive process, and a process that you need to go through very carefully and thoroughly with the Sharia scholars, and that's really been the effort, kind of going back and forth with that panel, taking into account their concerns and modifying the agreement to be consistent with their considerations.
What kind of impact do you expect this to have on the Islamic finance industry, and how important do you think derivatives will be to the industry in, say, 10 years' time?
Well, I think as with any other derivatives product, it kind of completes a part of the puzzle. You've got a lot of cash instruments, whether they be equities or bond, or in the case of Sharia law, Sukuk type instruments, project financing, those types of things. So those are all cash instruments or instruments that create credit exposure or something akin to credit exposure. And then these derivatives products, or hedging products in this case, allow parties who have those exposures to have a transaction available to them that's consistent with Sharia law that they can utilize. So again, it completes part of the picture.
What else can be done to ensure the growth of derivatives in Islamic finance? Are there any regulatory changes that need to be made, for example?
Well, the other area that we're focusing on significantly as ISDA, and this is something that we've focused on around the world, is recognition and enforceability of what is a core principle of our ISDA Master Agreement, but also a core principle of this Tahawwut Master Agreement that we've published with, we will publish with IIFM, and that is the notion of closeout netting. It is a contractual provision, but ultimately what you really want to know is that if your counterparty goes bankrupt and you need to make a claim against that counterparty, that you can look at your exposure on a net basis. And so that's significant work that we still need to do. Many of the countries in the Gulf, as well as other parts of the world, don't have enforceable netting arrangements, and so we're working with, for instance, the Dubai government, the Abu Dhabi government, other governments, Qatar, to talk about establishing enforceability of the closeout netting provisions, and that's really a critical next step for greater use. And we've seen that in the traditional derivatives world. Derivatives trading grows at a certain pace, but until there's certainty that you can look at your exposures on a net basis, there's ultimately there's a limit to that growth. But once you can have enforceable netting recognized, then there's a greater ability to do more transactions with a counterparty.
Do you think the Master Agreement will have any bearing on how the high-profile Middle Eastern restructurings play out?
I don't foresee that this agreement, at least the current restructurings, I think those will proceed, consistent with whatever the existing exposures are. It will be interesting to see in the future if there are restructurings, particularly if there are restructurings where you've got enforceable closeout netting, possible bankruptcies, those types of situations, just how the master agreement is enforceable in those contexts. But that's something down the road. It's not related to any of the current restructurings.
Has there been any resistance to the growth of derivatives in Islamic finance from Islamic finance investors? And if so, why is that?
I wouldn't say resistance. I think there has been a keen focus on the Sharia principles, and that's why we've had this process with IAFM to reach out to the Sharia scholars that they have established. And there's a range of approaches among Sharia scholars, including the ones on this panel. Some are, take different views, more strict views. We've tried to make sure that we have a document that, again, takes into account the range of those views. So I wouldn't say it's resistance. I think it's thoroughness, it's completeness, it's a desire for complete consistency with Sharia principles.
Do you think the Master Agreement will be able to provide more liquidity for the Islamic finance industry?
Yeah, we think so. Again, I think ultimately these questions of enforceability of netting can be a large determining factor in terms of liquidity going deeper and wider, if you will. But I think certainly having a standard document that people can trade on, as we've seen in other areas, allows people to focus on not the details of how a particular term is defined or how they're going to unwind their positions. It allows them to focus on the underlying economics, and when you can do that, I think you facilitate the growth of deeper and more liquid markets.
Sharia rules forbid financial speculation. Do you think there's any danger of investors using derivatives in Islamic finance for that purpose instead of for hedging?
Well, I think the agreement, again, it's called Tahawwut, which means hedging, and so it's intended to be utilized for hedging transactions. Now, I mean, there have been debates in the United States, I think also in Europe, where do you draw the line between hedging and speculation? What is hedging? What's speculation? It's being played out right now in the U.S. in this discussion of proprietary trading. What's proprietary trading? What is servicing a customer versus taking a position on your own? Sometimes you need to trade in transactions that don't involve the customer in order to be able to price and provide the product to your customer. So I think there's going to be, I think the parties that are most focused on the Sharia principles who utilize this agreement will use the document and will use it for hedging purposes, as I think is intended by the contract. Once a bank, whether that's a Islamic bank or perhaps an arm of one of the non-Islamic institutions, say a Credit Suisse or a Standard Chartered or a Deutsche Bank, once they've taken on the risks through that hedging transaction, they've got to make some decisions about how they want to manage that risk. And they may manage that using the Tahawwut agreement. They may manage it in other ways using existing hedging instruments that are available in the market, primarily utilizing the ISDA contract. So we'll see how that develops. But I think the key thing is that the parties that are entering into this contract will be intending to do so for hedging purposes, very much in compliance with Sharia principles.
Bob Pickle, thank you for your time.